Okay. So the first one is borrowed money from bank. So Minthu, can you tell me borrowed money from bank number one?
Yes, teacher. Uh, cash account debit 1,000 and bank loan account credit 1,000.
Yes, that's right. Cash debit and bank loan credit 1000 and 1000. Number two. Zwintran, can you tell me number two?
Well,
Issued share to the shareholder 5000.
wait a minute. It's a card account debit 5,000 and share capital account credit $5,000.
Yes. Cash debit and share capital credit 5000 and 5000. Next is WinMy. Can you tell me number three, which is sold product to the customer on credit? Number three, yes. Your microphone is not working. So give me your answer. Quickly give me answer. Winmai, can you type your answer? I have already told you that. What you have already told me? Give me answer. I need answer for number three. Quickly, I'm waiting too long. Do it fast. You know I asking you number three and you still ask me to wait. Quickly. Hang Tan, give me answer for number three.
I think account receivable, account debit, uh, two 2,000. Renewable account credit, 200. Two.
Why revenue?
2000.
Why revenue credit? You
Uh,
said revenue credit. Why? Tell me why revenue credit quickly.
I think it is cut.
So revenue is cash, right?
Yeah.
Did you copy this answer from someone else?
Yes.
You copy from who? Did you copy your answer? Did you copy this answer from someone? Hang Tan, can you hear me?
I answer in the chat box.
No, I'm asking you a question that did you copy this answer from your friends?
No.
So how come you don't know the right answer? Why sales is credit? Why you said because of cash? It doesn't make any sense. That's not good. You know the answer, but you don't know the reason. Tumin,
Yes.
give me answer for number 3.
My answer is the products account reasonable accounting DR debit.
What is DR?
Sorry, debit
And
and revenue income accounting credit.
income accounting? What is income accounting?
This is revenue. My revenue accounting.
Accounting. What is accounting? Is it account or is it accounting?
Account.
Okay. Why account receivable debit?
Um,
Why not cash debit?
because I think is the product is decreased
Product
and
decrease.
yes, product decrease.
What?
Products decrease.
So
So the product is in the of account receivable, and that's the reason I think is the product account debit.
where did you copy the answer?
No, this is my mind.
But it doesn't make any sense. Why sales credit?
Sales credit because the this is on credit, so revenue unearned revenue.
You're talking completely nonsense. It doesn't make any sense. And but your answer is right. How come?
This is my sorry.
Your answer is correct,
Right.
but the way that you have explained, it's not make any sense. I mean, it's wrong. You have your explanation is wrong, but your answer is right. So it seems like you copy answer from somewhere, someone.
No, this is my mind because I think the product is decreased. The product is just expense, and when expense decrease, it is this is debit.
When did I teach you product is expense and product will be credit? When did I teach you? I didn't teach you like this. I didn't teach you like this. You have to go back and check your notes. It's
Okay,
not correct.
I will check it.
Thuy Trang. Thuy Trang.
Yes.
Give me number 3.
Um, I think account receivable debit $2,000 and revenue account credit $200.
Why revenue credit?
Because I think sell products then and earn and receive money, but haven't
Unearned? Wait. You said unearned or earned?
unearned. I think
Is it unearned? What is the meaning of unearned?
I think receive money, but haven't supplied products.
Can you read number 3 again? Question. What is question number 3?
Sold product to the customers on credit.
Did you
To-
receive? Did you receive money?
Oh, yes.
Did you receive money?
Yes.
Why receive money?
Uh,
What is the meaning of own credit? What is the meaning of credit?
it's I think like pay money on the credit card.
I didn't teach you pay money on credit card. Why you said like this? I'm very sad. I never taught you pay money by credit card. You copy from who? Tell me the truth.
No, I think it this question is like in a theory in a part of current liability. So I think the answer are like that.
But account receivable is not current liability at all because the way that you have explained it doesn't match with the rules. Do you know the rules? Do you know the rules of journal entries? Yes or no?
Mm,
Yes or
no,
no? You don't know the rules.
um,
If you don't know the rules, how can you do this one then? Without rules, you cannot do the journal entries. Yes, it seems like you copy. Not twin. Lay not twin.
yes.
Can you tell me number 3 is right or wrong? This one?
Um, I think it is right.
Is right? Can you explain me why is right?
Yes.
Can you explain me why is right?
I think our revenue credits are because it is income, it is a profit, and it are
It's
increase.
not profit, it's income. Yes, it's income. And then why
And
AR is debit? Account receivable is debit.
because it is assess
And it's increase or
and it
decrease.
increase, so it will be a debit.
What is the meaning of own credit? Because the
Yeah.
question says sold product own credit. What does it mean?
you sold this product for customers, so you gain money from a customer. It is profit of this product.
No, 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 no. I'm asking, according to question, it says that sold product to customer own credit. What is the meaning of own credit? Own credit means
Uh, I
why did you write AR debit? Can you tell me?
what are
Why did you say account receivable is debit? Why? What is account receivable?
account receivable is what you receive from a customer. And
So did you receive money from customer? In question 3, did you receive money from customer?
yes,
Did you receive money? Yes or no?
I think it's yes.
Yes. So why not cash? If you receive money, receive money means cash, right?
Yes.
So why not cash?
Or because customer can be can't be pay for this directly.
Why?
They pay through credit.
What does it mean, credit?
It is you haven't receive money from a customer.
What do we call it?
Account receivable.
No.
What?
Again, you
Yes.
are correct, but you cannot explain. So, student, remember one thing. If your journal entry is correct, but your reason is not correct, you will have 0. Remember that. If you cannot explain the answer in your exam, you cannot explain to me that why you write account receivable debit or sales credit or whatever is debit, whatever is credit, you all remember that you will get 0 marks for it. You have marks for explanation. So with the help of explanation, I can understand that you know you did not copy from someone else, or okay, you did not copy, I believe you, but you guess. If you guess that I think this is debit, this is credit, and you do not know why debit, why credit, but your guess is correct, still you have 0 marks, because there is no any marks for guess. You have marks for your knowledge. No knowledge, 0 mark. Remember, everybody. So, Tarquin,
Yes.
can you tell me why account receivable debit and why revenue credit?
I think because account receivable is assets, so it increase. So it debit
Why increase?
because It's like the money that you pay later. So it increases.
What is the meaning of account receivable?
That means the amount of money that you pay later.
Who are you? If I say you means,
The customers.
so you preparing journal entry for customer or you preparing journal entry for company?
The company.
Company. So why you said you pay later? Company not gonna pay later. Company will receive later.
Customers.
So you're preparing journal for customer?
No, not company.
Company. So why you said that you pay later? Company not gonna pay to anybody. And if customer pay later, so we are not preparing account on behalf of customer. We are preparing account on behalf of company, and company is not paying. So your explanation is wrong. So tell me again, what is the meaning of account receivable?
The money that customer has to pay for the company.
So
So
why it's increased?
because I think it's
Customer hasn't paid. So why account receivable increased then?
the asset of the company.
What is asset for company? What is the asset? Now listen carefully. Account receivable are the people from whom company need to receive money. Company haven't received money from them. That's why companies sell product on credit. Hangtan, Tumin, and one more I forgot. Who? Tutrang. Remember, and of course Tao Queen too. Remember that. Own credit doesn't mean that credit card or something. Own credit means company sell product, but company do not receive money from customer. So customer become account receivable because account means person, receivable means company is able to receive money from that person. So when company receive money from person in future, that person become account receivable for company. Company sell more product on credit, more account receivable will increased. Account receivable is assets. That's why account receivable debit, because it's increased. Why sales credit? It's not unearned revenue or something. It's earned revenue. So don't use the word earned revenue, unearned revenue. So obviously revenue means earned revenue that I mentioned in the previous lecture. Revenue is your income. That's why it's credit. Simple. To mean it's as simple as that. The rule we have to follow to apply. Same thing with Hang Tan. Huin Zui, can you tell me number 4? Paid rent for the office. Huin Zui?
I think going to debit the rent account.
Mm-hmm.
Account 1,200 and credit cash account.
Zwintran?
Yes.
Can you turn your cameras?
Yeah. Can you see me?
Yes.
Uh,
Number 5. Return bank loan 1,000.
I think bank loan account debit $1,000 and cash account credit $1,000.
Why bank loan debit?
Because uh, you pay bank loan for the bank, so it's um it's liability, so it's the risk. So I choose debit and cash because you pay money for bank, so your cash will be the risk and it's a credit.
Yes. Mintu.
Yes.
Number 6. Purchase material from supplier on credit 2,500. Number 6.
Number 6.
Yes.
Uh, I do is
No,
material.
wait. Not Nwin Nop. Not Mintu
Oh,
Nwin. Mintu.
yes.
Mintu.
Yes, teacher.
Yes. Number 6.
Number 6 is uh, purchase material account debit 2,500 and account payable account credit 2,500.
What is accounts payable means?
Account payable means uh, you have to pay money for someone else.
Who is someone?
The account payable means you are the customer and you have to pay money for the company.
But why is credit?
Um, in number 6, they said you are purchase the material from the supplier, so it means you have to pay money for the supplier, so the account payable will increase and it's
Did you
mean
pay,
like
did you pay money?
uh, uh, I haven't paid yet because they said it's on credit, so I haven't paid the money yet.
Okay, all right. Next is Fung Fan. Fung Fan. Can you tell me number 7?
Number 7 is purchase building $5,000 and building accounts debit $5,000 and cash account credit $5,000.
Why cash credit?
Because it's asset and it decrease.
Okay. Le Nop Twin. Le Nop Twin.
Yes.
Can you tell me number 8?
Number 8. Cash account credit and wait paid debit.
Wrong. Tell me again.
Cash account, cash account debit,
Why cash
and
debit?
because our workers increase their money.
So you preparing accounts for worker or you preparing accounts for company? You're doing journal entry for workers or you're doing journal entry for company?
Or can you say again?
Why cash is debit? You said that cash is debit because worker will increase their money, right?
Yeah.
So you're doing journal entry for workers or you're doing journal entry for a company?
I do generate entry for company.
Company. So company pay money or company receive money?
Or company pay money.
So cash will debit or credit?
So cash a credit.
Why you said debit then?
Because the company pay money, so their access decrease.
Yes, so cash will be?
Cash will be credit.
So what is the debit?
Or debit is payable.
What is payable?
Or I think it is that is money the company must pay for workers.
So what is debit?
I think it is payable.
You mean accounts payable?
Yes.
What is accounts payable? What is accounts payable?
Our account payable is amount of money the company must pay for workers.
Company must pay, right? So
Yes.
number 8, did you pay or not?
Yes, the company are paid.
Company already paid. So it's not accounts payable, right?
Yes.
So what is this then?
I think it is are paid. I think these are wait paid account.
So what is the answer?
I think answer is waste paid account debit and cash account credit.
Yes. And what did you tell me before?
I answer wrong.
Yes, before you said cash account credit, wages expense account debit. You change, replace it.
Yes.
The always debit first. If you answer is right, but you are writing credit item first, again, you're wrong. 0. All right. So
Yes.
remember that. Pay attention.
Thank you.
So wages, expense, debit, cash, credit. 2,700. Sam Nopchi, give me answer for number 9, cash received from account receivable. Why account receivable credit? Why decrease? Liability? You said liability? Customer are liability. Why customer are liability? So is it company liability? If customer don't pay money, it's a company liability. Are you sure? But why you said liability? So why account receivable credit? Why decrease? Yes, because account receivable, they pay money, all right? That's why decrease. Okay, student, I want to tell you one thing. Keep in your mind, you are a company, all right? Don't think about customer, don't think about supplier, don't think about other person. Like as I guess, she get confused. She trying to say that it's a customer liability. So customer is paying. Yes, it's a customer liability, but we don't care about customer because we are not preparing account for customer. We are a company. When I say we, you, I, we are a company. We not another person. We purchase. We are a company who is purchasing. We sell. We are a company who is selling. All right. So keep in your mind, you are a company. You think from company point of view. You are a company, you preparing your accounts. Account receivable. You are not account receivable. Another person is account receivable. Accounts payable. You are not accounts payable. Another person is account payable. So that's why you are writing another person in your account. You're not writing yourself in your account. Make sense? You're writing another person. Supplier is your accounts payable. You're writing supplier name in your account. You're not writing your name in your account. Why are you writing your name in your account? Because you know you are buying, you are selling. But you're selling to who? You're buying from who? You're writing their name. So in future, you know that you have to pay money to this person. You have to receive money from this person. So account receivable, accounts payable are the other person. Don't think that you are accounts payable. I think some of you think company is accounts payable. No. Company is not accounts payable. company has to pay money to accounts payable. Accounts means person, pay. You have to pay to this person. So company is able to pay to account. Account means person. So company is able to pay money to person. That person call accounts payable. Same thing, accounts receivable. Another person is account receivable. Account means person. Receivable means you are able to receive money from this person. Accounts receivable. Account receivable means account means a person. You are not a person. You are a company. You are a company. Account receivable. This is company account receivable. Account receivable means account receivable. Company is able to receive money from this account, this person. So that's why this person become account receivable. Same thing, accounts payable. Company able to pay money to this person. So this person become accounts payable. Not you are not an account receivable or accounts payable. These people are account receivable and accounts payable. Remember that. Keep in your mind. All right. Don't get confused. Try to understand the meaning of every single item is given in your assets, liability, equity, income, and expense. If you know the meaning of item, you never make mistake. Tu Hin Zung Lee, can you tell me number 10?
Number 10 is tax accounts debit and cash accounts credit.
Why tax debit?
Because you have to pay to the government.
So why debit? Why debit tax? Tell me why tax debit?
Because it's because it's your it's a liability.
It's liability. So that's why debit. Right? It's a liability, that's why debit. Yes or no?
That's what
Sorry?
that's what I think.
Okay. So do you think liability are debit? Do you think why liability debit? Why not liability credit? What are the rules? Do you know the rules?
The rules.
What are the rules for liability?
So
Tell me what are the rules for liability? So can I say you copy from somewhere?
no, teacher.
So how come you don't know what is debit, what is credit? All right. So hi and Nguyen Long.
Yes, teacher.
Can
My
you tell
answer
me
is
number 10?
tax pay expenses debit 1,200 and cash account credit $1,200.
Why cash credit?
Cash credits because when I pay tax to the customer, I the
To
my
customer?
tax
Pay tax
is
to customer?
reduced and it's credit. Pay tax to the government.
Pay tax to government and then what will happen?
Tax pay is my expense and is debit, and the cash is reduced, so it's credit.
Why cash credit?
Cash is reduced because it access reduced is a credit.
Yes, that's right. Mean to Nguyen Nok. Tell me number
Yes.
11.
Number 11, account payable is current liability and is decreased, so it's debit, and cash is assets and is decreased, so it's credit.
So what is the answer?
My answer is account payable, account debit $2,500 and cash account for credit $2,500.
Wait, Boy Kwok.
Yes.
Tell me number 12. Depreciation on computer 200.
Depreciation computer 200. In my opinion, the depreciation account is debt 200, and the cash account is credit 200.
Why cash credit?
Because the value of this computer is in the asset, so it's big and it reduced. So I think it's a credit.
So, but why cash? Did you pay cash to someone? Did you pay money to someone?
No, but it's cost
So,
and it's
So if cost means expense, and expense always debit.
Yes.
So why
Loss.
why cash credit? So loss credit.
It's lost, the value is lost 200.
So did you pay this 200 to someone?
No.
So cash, did you give cash to someone?
No.
So why you said cash credit? Why you use the word cash? You use the word cash if you give cash, but here you said that we don't give cash.
The value account, right?
The value of
the computer.
So
on the declaration will be credit.
Credit will what?
Credit 200.
No, what we call it?
Depreciation.
Depreciation credit, right?
Yes.
So what is debit?
Oh. Depreciation credit. Oh, so it will be cash debit now.
Why cash debit? Did you receive cash?
No, but we lost cash.
So lost cash means we lost cash. Why lost cash?
Because of the depreciation.
So that's why cash debit. So what is credit?
Wait, credit is to pay.
Credit what?
Credit, the credit will be depreciation.
Why?
We must lost and we pay it by cash, so the cash will be credit.
Before you said that cash is debit, now you said that cash is credit. When I ask you what is debit, you said a cash debit. When I ask you what is credit, you said a cash credit. So you mean cash account debit and cash account credit? That's what you mean?
No. The depreciation account will be debit, or I can say it the value, the lost values will be debit, and the cash will be credit. We pay by cash.
Why
If
cash
cost.
credit? Why cash credit?
Because we will lose the revenue, we will lose money for because it's.
So this is your loss?
Yes.
So loss always credit or loss always debit?
The loss will always be debit.
So why you said cash is loss and loss is credit?
But I think the depreciation is a loss.
That's what depreciation debit. Why cash credit? That's my question.
Because if the depreciation is a debit, so there must be something that credit. So I think it will be cash.
Something must be credit. Why cash? Why not something else? Something must be credit. So why you choose cash? Why not something else? Why not bank loan? Why not share capital? Why not revenue? Why not something else? Why cash?
I don't know.
So that's why wrong.
Okay.
All right. So Thanh Thuy.
Yes.
Give me answer for number 12, I guess.
Number 12, I think that's depreciation expense is debit, and cash account is credit.
Did you pay cash to someone?
think can I change
Yes.
the answers? I think depreciations expand is debit and income account is credit.
Why income credit?
Because the computer is was sell, so I
We
think the
didn't
income
sell.
is
It doesn't say it's sell. Did we say sell? We didn't say it's sell, right?
yeah, it's didn't sell.
All right. So Nian Xiang,
Yes.
give me answer for number 12.
I think depreciation is bank account debit $200 and and computer accounts credit $200.
Why computer is credit?
Because um, because depreciation of computers. So computer value computers and go down.
Mm-hmm. Yes, that is right. Value of computer goes down, so that's why computer credit.
Yes.
So depreciation debit. So make sure look at everybody who made a wrong, not cash credit. Computer credit. Why computer credit? Because computer is assets and assets value reduce by this number. So that's why remember that. Tuan Do and
Cash account debit $1,300 and revenue account credit $1,300
why revenue credit?
because the computer is sold at $1,300.
Yes, you can say that cash debit and sale of computer.
Yes.
Sale of computer credit, because if you write down here revenue, you can write revenue, but in the bracket you can write down computer sales. It's okay, but at least you write something so we can understand we making money by selling the asset, right? So 1,300. Next is Nguyen Khan. Tran Nguyen Khan.
Yes. So 14 is past debts are 100,000 and I write that my answer is bad debts account debit $100 and account receivable account credit $100.
Yes. Bad debts debit and account receivable credit. Why account receivable credit?
So account receivable is the asset, and they decrease, so it will be considered as credit. And the bad debt is the loss of your company, is the company, and it increase. Loss is always debit. So
Yes. Yes, you can say increase also. Okay. All right. So yeah, that's correct. Next is Thun BB. Can you tell me number 15?
Okay. Number 15 is Mr. James account receivable debit to debit 2,000, and the cash account credit to 2,000, and the last one is account receivable credit 3,000.
So your debit or credit, is it equal? Your total debit and total debit credit is equal?
No.
So something wrong.
The first is Mr. James account receivable debit 5,000.
Mm-hmm.
And the second is a card account credit 2,000.
Mm-hmm.
And the last one is account receivable credit 3,000.
But Mr. James is account receivable. Why you said account receivable credit?
Because the 60% credit, and so
why why Mr. James debit? Okay, yes, this number 15 and number 16 is a little bit complicated compared to other ones. So anybody else want to try number 15?
So teacher, can I give my answer based on my opinion? So for number 15, I think there are three things that should be considered. First is Mr. James have give the cash for our company, and which means the cash is the access have been increased, which means the debit, and for the because Mr. James have been like pay the product on credit, get the product on credit, product sold 16% on credit, so it's considered as the account receivable, and the product sold is will give the revenue for the company, and I calculate for 40% of cash based on $5,000 of the product that he have to give, which means pay on cash we received $2,000, and the account receivable 16% based on $5,000 is $3,000. So my answer is the account. My answer is like the account and account receivable and cash account debit $5,000, and the revenue account credit $5,000. Is it right?
So you have two debit item, or you have only one debit item?
I think two debit item and one.
Can you tell me exact how much is the amount for first debit item, how much is the amount for second debit item, and how much is the amount of credit items? Tell me exactly.
Okay, so the account receivable will be account debit for $3,000, and the cash will account debit for $2,000, and the total is $5,000, and the revenue account for credit $5,000.
Yes, that is correct. So now I explain this one to someone who hasn't understand what's going on in number 15. So make sure you listen carefully. Yes, she's right. So now number 15 says that we sold product, right? Now number 15 says that we sold product $5,000. So in this $5,000, it says that 40% cash and 60% is credit. So means 60% is account receivable, which is Mr. James. Everybody understand this? All right, so this is your question. So you make questions like this. So cash is $2,000 because 40% of 5 is 2,000 and account receivable is $3,000. So you have two options. Option 1, you make 2 journal entry, one for cash, one for credit, or option 2, like as her, you can make 1 journal entry. It's up to you. I will show you both. All right. So first option is we make 2 journal entry. So we make journal entry for this sold cash, right? So what is the journal entry? Cash, when you sell product by cash to customer, cash debit, right? Revenue credit. How much? 2,000, 2,000, right? And now this one. Now this one, sold on credit. Sold on credit means account receivable debit because you sold on credit. So account receivable debit and revenue credit. How much? 3,000. 3,000 and 3,000. This is option 1. You can make 2 journal entries, one for cash, one for credit. Everybody understand this one? Is that okay, everybody, or you want me to explain again?
Yes, it's clearly.
Okay. Now this is option 1. You make 2 journal entries. You have now option 2. You can make 1 journal entries like what she did. You can, if you combine these 2 journal entry, it will become 1. What is that? Cash, debit, cash, debit, right? Second one is accounts receivable debit and revenue is credit. How much is cash? 2,000. You can see cash 2,000, cash debit 2,000, account receivable debit 3,000. So revenue credit 3,000, revenue credit 2,000. So total revenue credit is 5,000. So you can choose second option, like what she explained, or you can choose first option. In my opinion, first option is much more easier for you. But again, both options are correct. Both options have the same marks, same answer. All right. So it's your choice which option you want to choose. If you do not understand option 2, then don't worry. You can choose option 1. If you understand both and you think option 2 is more easier for you because it's just a 1 journal entry, you can choose option 2. But remember, in option 2, look at your debit. How much is total debit? 5,000. And how much is total credit? Also 5,000. And what I explained you before, your debit and credit always equal. Look, debit 2,000, credit 2,000 equal. Debit 3,000, credit 3,000 equal. So Option 1 also correct. And option 2, your debit amount and your credit amount should be equal. If it's not equal, something wrong. So is that okay? Number 15, everybody okay with it? Any question, anybody? Can we move on to number 16?
Yes.
Okay. Now number 16 also belongs to your number 15. So it says that Mr. James turns to bad debts. So we recovered only 50% money from Mr. James. So who wanna give me answer for number 16? Again, number 16 also you can have 2 journal entries or you can have only 1 journal entries. So who wanna try and give me answer for number 16? Nguyen Văn, Minh Tâm Nguyen Văn. Can you
Yes.
try?
In my opinion, is yes. In my opinion, is bad debt accounting debit 15% and payment receivable account credit 15%.
Can you bad debts account debit and
Bad account and payment receivable account.
what do you mean by payment receivable? Why payment receivable?
No, payment receipt because in account receivable, Mr. James recover only 15%, and I think that's asset is decrease, and that's credit.
Only 1 journal entry? That's all?
Yes, I think.
Okay. Anybody else who want to try?
Yes.
Nguyen Phi? Try for number 6.
Can you wait me for a minute because I didn't do the exercise
Okay.
for number 16.
Yes. Okay, so in the meantime, Trung Dat, can you try number 16?
I don't know.
You don't know, okay. Phúc Nam,
Yes,
can you try number?
I think first one is bad debt account is debit, and second is Mr. James account is credit because he will no longer pay for us in the future.
Okay.
So the access reduce.
That's all? Only 1?
Yes.
No. Anybody else? Yes.
For my opinion, I think that the bad debit, Mr. James debit about $2,500, and second is the account receivable credit.
Wait. How much?
2,500.
Why 2,500?
Oh, because I see that we recover only 50% from Mr. James.
So how much you sold to Mr. James?
In the number 15, we sold the product to the Mr. James is for 5,000.
But in 5,000, you already recover 40%. 60% you haven't recovered. So Mr. James need to pay 3,000, not 5,000.
3,000. Oh. Okay.
Right?
Oh.
Is that right?
I think that when we sold to the Mr. James for 5,000 and we only recover about 50%. So
no. Okay. Question 15 is we sell product to Mr. James and Mr. James already paid 2,000 as a cash.
Oh.
Mr. James did not pay 3,000. So Mr. James become account receivable for 3,000, not for 5,000, because in 5,000 you received 2,000 already in your pocket. So still Mr. James need to pay you 3,000. So Mr. James become account receivable for 3,000, not for 5,000.
Okay.
In this 3,000, 50% Mr. James paid, and 50% Mr. James did not pay. That's why Mr. James become bad debts.
Yes. So it's 1,500.
So what is the answer now? 16?
The answer is the bad debt. Mr. James account debit $1,500 and account receivable credit $1,500.
That's it.
Yeah. Oh.
Finish?
Yes, finish.
No, still one more you need check again. Nguyen Phi, have you finished?
Nope, I haven't.
Nam Nguyen, can you try number 16?
Teacher, is it possible for me to try this question?
Okay, let me ask Nam Nguyen because he hasn't done yet. So, yes.
I think is Mr. James bad debits or bad debts account debit 100 $1,050
$1,500.
$1,500. Mr. James account receivable account $1,500. And cash account cash receivable account debit $1,500 and account receivable account credit $1,500.
Yes, that is correct. So yes, but you changing the different names. Sometimes you're using the word Mr. James, sometimes you're using the word account receivable. So that's why it's mixed. And Nguyen Khan Lin, I guess. You wanna try, or you have a same answer or different answer?
Yes. So, but I think that I may use the word wrong. The first journal I write is the bad debts. Mr. James account debit, $1,500. The account receivable account credit, $1,500. And the second journal is the cash account debit, $1,500, and the revenue at account credit $5,000.
No, it's not revenue. Okay, now let me explain you, everybody. So So remember, it's number 16 belongs to number 15. So you have to understand number 15. So I repeat number 15 again. So if in case you do not understand number 15. So I repeat number 15. Number 15 says that we sold product $5,000 to Mr. James, right? So Mr. James already paid us 40%. So we already received 40% cash from Mr. James. But we haven't received $3,000, which is 60% from Mr. James. This is your number 15. So remember, you already sold. You already sold. So don't use the word sales again in your number 16. Remember this thing, all right? Now, what is number 16? Now, number 16 says, Mr. James. This is your Mr. James. Mr. James, right? Now, Mr. James paid 50%. Mr. James paid, right? So means you receive 50% cash from Mr. James, right? And 50% Mr. James do not pay. So Mr. James become bad debts, right? So now you also have two journal entries for number 16, or you can make it one later. So I tell you number 16, which two journal entry? The first journal entry for this one, you receive cash from Mr. James. So receive cash, so cash debit. How much? 50% of 3,000 is 1,500, right? And what should be credit? Account receivable credit, because when you receive money from account receivable decrease. So account receivable in bracket, you write Mr. J, right? Credit. How much? 1,500, right? First journal entry done. Now bad debts. So Mr. James become bad debts. So bad debts always loss. So bad debts debit. How much? 1,500. And what should be credit? Account receivable credit, because remember previously we made some bad debts entry like a number 14. Bad debts debit, account receivable credit. We know that. So that's why bad debts debit, account receivable, which is Mr. J, will be credit 1,500. That's all. No revenue at all. Like as Nguyen Lin, she used the word revenue because you already sold here. So revenue already generate here. So why you wanna make revenue again? Because there is no reason to use revenue word here. Receive money from account receivable, do not receive money from account receivable, right? Two situation here. Receive money from account receivable, which is here, and do not receive money from account receivable, which is here. You can combine them together. So what will be one journal entry? Cash debit, 1,500. Bad debts debit, 1,500. Account receivable credit, $3,000. That's it. So if you make small diagram for you, that much more easier to figure it out, what gonna be right or what gonna be wrong and how you're gonna make it. So everybody okay with number 15 and 16? That's your 15 and that's your 16. Well, that's 15 and that's 16. 15 and 16. Now, number 3 is a ledger. Now, what is the meaning of ledger? Another name of ledger is, we also call it T account. T account. Now, what is T accounts? The purpose of T accounts is to classify all the journal entry into separate accounts, right? So the purpose of this journal entry, the step 3, which is ledger, is to classify each journal entry into separate account. We gonna make a separate classifications, different types of T accounts, and each T accounts is a separate account for one particular items. So we also call it classification. So we're going to classify all the journal entries for step 2 into a separate account. But now the question is, why we have to do this? Let me explain you why we do journal entry. Why we have to do this? Because, so let's take some example of step 2, which are journal entries. So for example, cash debit and building credit. So let's say $2,000, $2,000, right? So for example, sales return debit 2,000 and accounts receivable credit 2,000. Maybe the third could be so purchase material debit and cash credit, let's say 200 and 200. Another example is rent debit and cash credit, let's say 100 and 100. This is just example of your different types of journal entries. By looking at these journal entries, we know we already entered the information in accounts, but we do not understand what is the change in one particular types of account. So like, for example, you can see in first journal entry, cash debit. Third journal entry, cash credit. Fourth journal entry, cash also credit. So sometimes cash debit, credit, debit, credit, debit, credit. So at the end, how much cash do we have left? Do we know that with the help of journal entry? No, it's not easy. This is just example of 4 journal entries maybe you can easily find. But sometime in the question or sometime in a company, we have 10 journal entries, 20 journal entries, 100 or maybe sometimes thousands journal entries. By looking at 1,000 journal entries, can you understand how much cash do you have? No. By looking at all these journal entries, sometimes you purchase material, sold material, purchase sales, how much money you make it by selling product. Can we calculate? No. Same thing, you purchase machine, sold machine, right? You purchase another asset, sold another asset. So how much asset left at the end of the period? Do we understand? Of course not. So that's why we have to prepare T accounts. T accounts, we prepare all account one by one so we can understand how much changes is in cash, how much cash increase, how much cash decrease. For example, we will prepare sales account, how much sales increase and how much sales decrease and so on. So that's the purpose of T accounts, to classify journal entry into a particular accounts so we can understand the movement in accounts, up and down or changes in the account. Because of these reasons, we have to prepare T account or ledger. That's the meaning of classification. That's what we call it, classification, right? Now, why we call it T accounts? So step 2, now we have a ledger. Why we call it T accounts? So remember, it's like this, T accounts. So means you have 2 sides. One left side, remember, it's a debit side. This side is a debit side and the right side is a credit side. All right. So in reality, it looks like this, like this, like this, and here and here. So this is your one side and this is your another side. So this is your T accounts. So this is your amount column. If any amount is debit, this is your amount column for any amount credit. And here you will write down the name of information, name of anything. And here on the top is the name of account. So that's why we call it a T accounts. That's what it looks like, T. You can see it looks like T. That's why we call it T accounts. All right, 2 sides it has. But in reality, it looks like this, one amount column, another amount column. All right, but in short form is a T. All right, now we have to prepare T accounts. It depends upon your journal entry. We will make T accounts. All right. Now we're gonna prepare T accounts using these journal entries. So like cash account. So we prepare first T accounts. The T account name is cash account. Next is building account. Building account. Third is sales account. You can see here, sales account. Sales account. Next is account receivable account. Accounts receivable account. Next is a purchase material account. Purchase material account. Next is a cash account. We already prepare cash account. Do not prepare second cash account. We prepare only one account one time. Because if you prepare 2 cash account, you will not understand this amount belongs to this cash account or this cash account. So all the cash account will be in one account. All the building account information will be in building account. So do not prepare one account 2 times. Remember that. So cash account already. Next is a next is a rent account. A rent account. And the last is a cash account already. Everybody understand that? So it depends upon your journal entries. The more journal entries you have, the more T accounts you have. All right. Everybody understand until now? Now let's move on to the next step of your ledger. Now you're going to transfer all the information from here to here. Let's start one by one. Listen carefully. It's very important. Look, cash account debit because of building. Cash debit because of building. Building credit because of cash. You understand that? Same thing. Sales debit, sales return debit, actually. It's a sales return. Sales return debit because of account receivable, or account receivable credit because of sales return. Third, purchase material debit because of cash, right? Or cash credit because of purchase material. And last, rent debit because of cash, or cash credit because of rent. Make sure everybody understand that. So this is the one of the way to understand. Now, same thing keep in your mind, right? I repeat again, in your T accounts, always your left is a debit column. Doesn't matter, because here we don't care about asset, liability, no asset, no liability, nothing at all. Just always remember your left side is a debit side of your T account, and right side is a credit side of your T accounts. Remember that. All right, doesn't matter it's cash, doesn't matter material, doesn't matter expense, cost, profit, whatever. Always debit side and credit side. Remember that. Now, so number one here, cash account debit because of building. So cash account debit because of building. So I write down here, building, how much? $2,000. Everybody understand? Cash account is debit, the debit side of cash account affected because of building. All right. Building credit, building account, credit side affected because of cash. So building credit side affected because of cash. How much? 2,000. Everybody understand number one? I repeat, your cash account debit side because of building. So cash debit side building. Building account credit. So building account credit side because of cash. So that's why building credit column, credit side, it's a cash. Same number two. This is your sales return. Sales return debit because of account receivable. Sales return debit because of account receivable, 2,000. All right. Account receivable credit because of sales. Account receivable credit because of sales. Amount 2,000. Same number three. Purchase material debit because of cash. Purchase material debit because of cash. How much? 200. Cash account credit because of purchase material. Cash account credit because of purchase material. How much? 200. All right. Number four. Rent debit because of cash. Rent debit because of cash. 100. Cash credit because of rent. Cash credit because of rent. 100. That's all. That's what you have to do. Everybody understand until now? All right. Now let's move on to the final step of this ledger. Now we calculate the balance of each side. All right. So now, cash, I will explain you later because you have two sides. Look at the building. How much is credit side? 2,000. And how much debit side? 0. So your balance is 2,000. Building account, credit balance, 2,000. Sales. Credit side, 0. Debit side, 2,000. So sales return, debit balance, 2,000. Account receivable, debit side, 0. Credit side, 2,000. So account receivable, credit balance, 2,000. Purchase material, credit side, 0. Debit side, 200. So your answer is purchase material, debit balance, 2,000. Rent, 0. And here is 100. Now you can see within few seconds, we can understand how much is the balance of building, how much is the balance of sales return, how much is the balance of account receivable, how much is the balance of purchase material, rent account, blah, blah, blah. So you don't have to check again in journal entry, what is debit, what is credit, what is debit, what is credit. You directly find the answer by looking at your ledger account. If you want to know how much is the balance of your machine account, you just look at the ledger and you understand within a few seconds. All right. Now, how about cash? Because cash, you have both side number. Now, how are you going to do cash? Listen carefully how you do cash. Remember, you have a debit side, you have a debit balance, and you have credit balance. So you have debit balance and you have a credit balance. So remember, so what you do, debit balance minus credit balance, and that's your answer. But answer is debit side or credit side. If debit side is greater than credit side, this is your debit balance. So let's say debit balance is 1,000, debit side is 1,000, and credit side is 200. So your answer is 800 debit side. You understand that? It's simple, right? So you check how much is debit and how much is credit, and you minus. After minus, whatever answer you have, you will write down only on the higher side. All right, like as here. So how much is debit side? 2,000. Debit is 2,000. This is debit. And credit is 300. 300 is credit. So you got 1,700 is debit answer. So 1,700 is debit answer. And here you can write down 0. So what does it mean? Within few seconds, we can understand cash account is debit balance. What does it mean, cash account debit balance? Your cash is increased by 1,700 in this year. That's the meaning of this. Or you have cash, 1,007. Cash debit, cash increase. Cash debit means cash increase. So cash increased by 1,700. This year, your cash is increased by 1,700. Why? Because you sold building. You can see, sold building, and you purchase, return something, and pay rent something. So finally, you got $1,700 left. That's another way to understand. This is information we have, right? So this is the information we are receiving from this cash account. So this is the way to do step 3. Step 3 is finished. That's all. Step 3 is not that technical that step 2. Step 3 is just simple calculation, but you have to just pay attention when you're transferring the information. That's it. So in Ledger, you have to do 3 things. First, you make empty T accounts. You look at your journal entries, you make many T accounts without any numbers, just name and T, name T, name T. And then you transfer the information one by one. Cash debit because of building credit because of cash, right? And the last thing, you calculate the number and you circle. So it means this is your balance. So you can easily see that. That's all for step 3. Everybody okay with this step 3? Okay, before we move on to the question for step 3, I also want to complete step 4 because step 3 and step 4 very simple, very easy. Because step 4 also very simple, more simpler than step 3. Step 4 is just simply plus and minus something. So let me explain you step 4. Then whatever journal entries you have made, you use those journal entries to do step 3 and step 4. All right. So now what is step 4? Let's go back and check what is step 4. So this is your step 4. So step 4 is a trial balance. So what does it mean? You're going to check the balance of debit side and credit side, because in your step 2, your every journal entry has a debit and credit balance equal, right? So in step 4, you check again that whether you made any mistake in your step 3 or not, because sometimes when we are transferring information from step 1 to step 2, we make some mistake. All right, so we have to recheck our mistake. But of course, you don't have to go to T account and check one by one. No. So we will do a trial. You know, trial? We just make a trial to check the balance, whether balances are equal or not. So what is the purpose of this trial balance? To find whether debit side is equals to credit side or not. All right. So how to prepare trial balance to check? So now let's make trial balance. Oh, not this. All right, so now let's do it step 4. I am explaining you step 4 here. Step 4 is a trial balance. So how does step 4 looks alike? So your step 4 looks like this. Only one you have to prepare. You don't need to prepare 2, 3, 4, or 5. One here, one here, and one here. So this is your debit column. You can call it debit side. And this is your credit side. So just you need all this information. Now start from here, cash account. So cash account, debit. So you write down in debit side 1,700. Building account. Building account, credit 2,000. Credit 2,000. Sales return. Sales return accounts, debit 2,000. Debit 2,000. Account receivable account, credit 2,000. Credit 2,000. Purchase material account, debit 200. Debit 200. Student, remember, I am using short form, but in your exams on your assignment, you have to write down the full word, full word, not just abbreviation. Remember that. And rent account. Rent account, debit 100. Right. Now we check, is it equal or not? 2 plus 2, 4,000. 3,700, 900, and 4,000. So everything is correct. So your question is right. If your trial balance not match, your question is wrong. Means you made some mistake, maybe in your step 2, maybe in your step 3, or maybe you make mistake here to plus and minus, or you write down the wrong number, right? So this is your step 1, 2, 3, 4. So this topic is finished. Topic 2 is finished. Now, I want you to go back to all the practice question. The practice question, I think I gave you 2 questions or 3 questions until now. 3 questions, right? How many questions you have practiced? 2 or 3? 3, right? 3 source document, 3 times, or 2?
2 times.
2. So now you go back to your source documents. I mean, for all these 2, and then you will make it.
You meant all the homework that you give us?
Yes. Now you have to make it, because you already have journals, right? You already done step 2. Now step 3 and step 4. Do that. So better we stop here. So that would be your homework. So you can find answer by yourself, whether you made a mistake somewhere or not. So, but before we stop, anybody has any question, anything you do not understand for step 2, step 3, step 4, you ask me. Because when I finish your this question, then we may discuss about your assignment. And your assignment, you have a journal, ledger, and trial balance. So we may discuss next week or next to next week. It depends.
So teacher, you say that if the debit side, for the cash account, 1,700, we can conclude that the cash is increased 1,700 because
that's the meaning of this. You can think cash is debit. Debit means cash increase. Why cash increase? Because of building credit means you sold building. Okay, now cash is credit, cash decrease because of these two items. So increase 2,000 and increase 2,000 and decrease 3,000. So net increase is 1,700. That's the meaning of this.
Okay, so if it's for other thing like building account,
yes,
or
building account could be same thing. For example, you purchase building, you sell building, purchase building, sell building. If, for example, let's say, just for example, let's say you sold building, but you purchase building as well. So purchase building as well. Let's say cash 5,000 because you purchase building. So building account debit, cash account debit, cash credit, building debit and cash credit. So building debit because of cash. Now debit side 5,000, credit side 2,000. So balance is 3,000 debit. So what does it mean? Means your building increased by 5,000, building decreased by 2,000. So the net value of your building, or in this year, the building or your asset is increased by 3,000. That's the meaning of this. Same rule apply to all kinds of T accounts. But just be careful about your liability, because liability debit means something else than the asset. Right? Like as you borrow money from bank, cash debit, bank loan credit. So bank loan credit because of cash. Now you return loan back. So return loan back means your bank loan debit, cash credit. So bank loan increase, bank loan decrease. So how much bank loan left at the end of the year? You will see it could be debit side or this could be credit side. If bank loan has a credit balance, it means bank loan increase because credit means liability increase. If bank loan has a debit balance, so means your bank loan is decreased by this amount in this year. Simple. Just keep in your mind that 5 rules. You never make mistake if you remember those 5 rules. Right? So everybody okay? Any question? If no question, then we can stop. But any question?